everyone, I welcome you all to today's session. So today's unit of discussion is unit 14, that is responsibility of collecting bank. Now there are various responsibility of paying bank, there are various responsibilities of collecting bank, and in which circumstances a paying bank is not held liable for any loss or fraud. That is we have discussed in the previous chapter. Now in this chapter we are going to discuss what is the responsibility of collecting bank and how a collecting bank is protected from any type of liability in frauds under which circumstances. Okay, so this is a very short chapter, I think the shortest chapter of the whole PPP. So let's start discussing with the very first thing. Okay, now the condition for the protection. First of all, the protection under section 131 is subject to satisfy the following condition. Means section 131 of the Negotiable Instrument Act provide protection to the collecting bank under this circumstances. If the collecting bank has followed all this point, and if then also the fraud occur, then the collecting bank is not responsible for any type of loss. First of all, the collecting bank should act in a good faith. Okay, second, it is without the collecting bank act without any negligence. It receive payment from a customer, the check is crossed generally or especially, that is checked by a collecting bank. So collecting bank has ensured that the check is specially crossed or crossed generally. It check the prima facie genuineness of the check, means all the apparent tenor is actually good or not, means apparent tenor is checked by the bank. If there is no cut or no nothing that is hampered or changed in that check, it is checked by the collecting bank. It looks for any type of fraud, forgery, tampering, that can be verified with due diligence and ordinary care, and is apparent on the face of the check to be truncated. So a customer, when a customer is depositing check to a collecting bank, now collecting bank has a responsibility, first of all, to see the apparent tenor, the genuineness. The collecting bank should look out for the fraud, that if there is no fraud in this, everything is good, everything is clear in the apparent tenor, there is no hampered or tempered, there is no deliberate attempt to just cancel or make some changes in the check. The collecting bank collects that check in a good faith in ordinary course of business, verifies that the check is crossed generally or especially crossed, checks the genuineness of the check. So if all the thing is good, and if all these things has been checked by the collecting bank by collecting the check before its truncation, and if even then any fraud occurs, now the collecting bank is protected from any type of liability under section 131 of the Negotiable Instrument. Clear? Okay, now if we talk about the duties of a collecting bank, so this protection, it will be given in this condition. Now duties, first of all, section 31 131 provides the protection to the collecting bank, that the collecting bank shouldn't act in any negligent, and the bank has to provide a proof that the bank while collecting the check haven't involved in any type of negligence. And if the bank has submitted that proof, the bank is discharged from any type of liability that arises from the fraud, if the fraud occurs. Now what are the duties of a collecting bank? The first duty is to open account with reference and sufficient documentary proof. Now, the very first responsibility of the bank, of a collecting bank, is to open the account of the customer with, first of all, reference and full documentation. Reference means, you know that earlier, before the introduction of KYC, when any new customer want to open the account in a bank, the customer has to provide a reference either from the employee of the bank or from the older customer. Okay, so if customer is actually coming in with the reference, the collecting bank has to ensure the genuineness of the customer, and not only the customer, of the reference also, that the reference is good or not. And plus the full documentation, the full KYC of the customer as well as the reference of that customer, both should be collected by the bank. Second, duty to confirm the reference where the referee is not known or has given reference in absentia. It means that it is the responsibility and the duty of the collecting bank that to ensure that the reference is genuine or not. So the where the customer is not coming by the reference, the duty of the collecting bank is to ensure the genuine of the customer directly from the address or the location of that customer. And if there is a reference, if there is any reference through which a referee is coming, the reference overall due diligence is also required from the collecting bank. So this is the responsibility of the collecting bank. Third, to follow all the KYC under the Prevention of Money Laundering Act rules and KYC direction of RBI. So if you are opening the account, so you must ensure that all the KYC should be completed, all the know your customer policy and norms steps should be taken by the collecting bank. Next, to ensure that the crossing and special crossing, now while collecting the check, it is the duty of the collecting bank to ensure that there is a special crossing or a general crossing in the check. Now it is the duty to verify that the instrument is free from any apparent defect in the instrument. For example, this is the check, and now if anyone has just crossed this amount and written this 1000. Now this check is shouldn't be accepted by the collecting bank. Why? Because the collecting bank should make ensure and to verify the instrument, that the instrument should be free from any type of apparent defect. Apparent defect means any type of visible defect. So there should be no visible defect in this case. Sorry, there should be no visible defect on the instrument. Last, it is the duty to take into the account the state of the customer's account. So it is the duty of the collecting bank to ensure the wellness and well-being of the customer, in which sense, in the financial term. For example, a bank, a customer is actually an employee of a certain bank. Now the bank knows that, okay, this is the salary that is coming. Now if there is unnecessary credit of the amount that is done to that customer account, it should be reported to the management. Okay, now second thing, the collecting bank has to make ensure that the customer financial position is in the good strength to make out the payment of necessary check. Okay, lastly, the negligence of the collecting bank in collecting checks payable to the third party. So the collecting bank need to ensure that there should be no negligence of the collecting bank while collecting the check that is especially payable to the third party. So these are all the duties of a collecting bank. First, to open an account with reference. Second, to check due diligence of the customer as well as the reference. To follow all KYC, to ensure that there is a special crossing or general crossing, to verify that the instrument should be free from any apparent defect, to take into account the customer's account. Lastly, to avoid any negligence while collecting the check which is payable especially to third party. So this is the duty of the collecting bank. Now quickly let us discuss some question related to this. First of all, in absence of proper KYC document, collecting bank can be held liable for a collection of a fraudulent check on the ground of which negligence, convenience, crime, or arrogance. So, on which ground the collecting bank should be held liable if they collected a fraudulent check. So the correct answer is obviously negligence, because on the ground of negligence, the collecting bank should be held liable that why the bank has collected the fraudulent check. So it is the negligence of the collecting. Okay. Now the last question is, the condition for collecting bank claim protection has been laid down under what? Under which act? Indian Contract Act, Banking Regulation Act, Negotiable Instrument Act, or Banking Companies Rule? So obviously section 131 of the Negotiable Instrument Act that provide the condition for the collecting bank to claim protection. Okay, so this is Negotiable Instrument Act. Okay, so this is the complete chapter. This is a very short and the complete chapter. I hope that you have all enjoyed this chapter. Okay, just please keep on commenting and giving feedbacks and rating to the session. Thank you so much. Take care, everyone. Bye bye, guys. Take care, everyone.